Hello dear traders, welcome to InstaForex TV. You're watching a weekly link up with me, Anna Kasatkina. We will discuss the ongoing situation on Forex with technical analyst Peter Yakimovic and forecast further moves of popular currency pairs. This trading week will be memorable for extreme volatility across financial markets. The turmoil started with a slump in oil quotes, which triggered an alarm about gloomy prospects of the global economy due to the coronavirus pandemic. In an effort to stamp out the deadly virus, the US Fed slashed interest rates by 50 basis points at the emergency meeting. The central banks in the UK, Canada and Australia followed its suit. Only the ECB did not revise radically its monetary policy. So the euro-dollar pair retreated slightly following a notable climb earlier this week. Now traders are anticipating the regular policy meeting of the Federal Reserve, slated for Wednesday, March 18. How is the euro-dollar pair going to trade in the run-up to the policy statement? Will the Fed's policy decision open new prospects to the currency pair? Let's find out from our technical expert Peter Yakimovic. Hi Peter.
Hello dear traders. On the euro versus US dollar, what I found basically is that basically the euro traded higher, and since our last analysis, basically the second scenario, the upward scenario, basically played out. But most recently, according to the daily time frame, I found evening star candle formation and rotation to the downside. So basically the expectation on the euro dollar is that the price can actually test the middle Keltner line, which is basically a 20 exponential moving average. And that is an area around 1.100, 1.0, 990. But if there is an even bigger drop and a stronger momentum, then I see no reason why the euro cannot go to maybe 1.0900 or even 1.0785, which is that swing low based on the daily time frame in the background. But let's go step by step. And the first reference point to the downside is at the 1.1100. This will be the critical pivot point in my opinion, because there is a daily 20 exponential moving average there, and also the consolidation zone from the previous price action according to the daily time frame. So if the price cannot find support there on the 20 exponential moving average around 1.1100, then definitely price can even go to the 1.0900 or even lower. So my expectation is the price will go towards that, at least that middle line, that middle Keltner line. And then you should watch carefully if the price will still go to the further downside, then it will open the door for the 1.0900 or even 1.0790. So I predict a further downside towards the middle Keltner line, and then watch the downside break. Will confirm the downside continuation. The bigger reversal or any pattern may confirm the potential bull flag in a daily. But for now, I expect a further downside.
The pound sterling is likely to follow the similar trajectory, isn't it?
On the British pound versus US dollar, basically what happened is since my previous forecast, this price traded higher, but as I mentioned in my previous forecast, basically the British pound got a big sell-off. And basically the result, I think the cause of that was basically the rounding top on the daily time frame, the head and shoulders pattern that I found on the daily time frame. And basically this is just an effect of that rounding top in the background. Most recently, I found that on the daily time frame, we took the swing low, very important swing low point on the British pound. And my expectation is that pound can trade still lower towards the levels at the 1.2585, 1.2520, and even 1.2400 level. So the momentum is very strong to the downside, and I see no any reversal pattern yet on this currency pair. So definitely, I expect, with of course normal regular upside corrections like potential bear flags or ABC stops, I expect that pound can trade lower even up to the 1.2400 level, which will be a very big downward target. So my prediction is to the downside.
Could you please share your outlook for the dollar-yen pair, which is viewed as a barometer of risk sentiment?
On the USD versus Japanese yen, there is basically potential for the ABC correction to evolve even further. So what I see basically the 8-hour time frame and what do I expect on the USD Japanese yen is the further rally, maybe up to the 106.80, which is actually consolidation zone on the 8-hour time frame. So 106.80 or 107.60 can be good levels for some, like, let's say, targets to the upside. So I see that potential ABC to develop. So I see that upside structure looks like a corrective, but definitely my expectation is to the upside towards the 106.8.
Thank you, Peter, for your trading recommendations. See you next week. You've watched the Linkup on InstaForex TV with me, Anna Kasatkina, and Peter Yakimovic, technical analyst of InstaForex office. We wish you always profitable trading and see you soon.